Okay, I'm going to get started. Good morning, everyone. A warm welcome to everyone. We're so glad to have you with us today. I am Ria Chaudhary from the Catalyst Group. We also have several other members from our team on our call, including our CEO, Clyde Payne, and Vice President Alisa Davis. Before we begin, just a quick reminders. Please stay muted unless you're speaking. You'll see a few poll questions pop up during the presentation. We encourage you to submit your responses as we go along. Feel free to drop in your questions in the chat throughout the presentation, and we'll address them at the end during our question and answer round, like a 10-15 minute at the end. And as always, since we have representatives from competing companies on the line, please keep in mind our antitrust guidelines. Let's keep the discussion focused on technology, research, shared industry insights, avoiding any confidential business details such as pricing, production, or customer information. Um, Ajit, if you can move on to the next slide. For those who may be new to the Catalyst Group, the Catalyst Group is a global consultancy with over 40 years of experience supporting the refining, chemical, plastics, and environmental industries. We bridge technical insight and business strategy through our two main divisions. One is TCG Consulting, which delivers custom client projects, and TCG Resources, which manages more industry focused programs and our technical studies. We're going to talk about one of our membership programs. Next slide, please. Uh, One of our key membership driven initiatives is the Industrial Energy Transition and Decarbonization Consortium. We call it the IETD. Through the collaborative platform, we track emerging technologies, benchmark best practices, deliver actionable insights across industries, helping our members stay more informed and more ahead of the curve. Through IETD, members gain opportunities to maximize their resources, shape the research agenda of our reports, and gain access to leading expertise, and connect with peers who are also advancing industrial decarbonization efforts. And today is, one of the main examples of how we bring that collaboration to life through our virtual sessions and webinars. So yeah, now let's turn to today's topic, which is unlocking subsurface hydrogen, transforming end-of-life reservoirs into hydrogen assets. Um, hydrogen is Hydrogen demand is growing rapidly, but cost and scalability remain key challenges. Today's session will explore a novel approach using subsurface biotechnology to convert depleted oil reservoirs into low-cost hydrogen-producing assets. We're pleased to have Ajeet Singh from Eclipse Energy with us today. Ajeet Singh is the Director of Business Development at Eclipse Energy, where he focuses on commercializing subsurface biotechnology solutions. With nearly a decade of experience across geology, energy advisory, and private equity, Ajeet brings a unique cross interdisciplinary perspective, and his background spans upstream oil and gas, mining, international investment strategy, enabling to bridge that gap between technical innovation with commercial execution. So in today's session, Ajit will walk us through the technology, field insights, and the path to commercial scale. With that, we can get started. Ajit, over to you. Thank you so much.
Awesome. Thank you. Thanks, Ria, for the introduction. And thank you, everyone, for taking the time today. Today, what I'm going to be doing is I'll be walking through Eclipse's approach to hydrogen production. This isn't going to be from the standpoint of building entirely new systems. Really, this is us reusing and rethinking what's already exists in the subsurface. So specifically, I'll be walking us through what does the hydrogen market look like, the opportunities, the different forms of hydrogen production, and then we'll get into what we're doing here at Eclipse Energy. So what we've done in the lab, how it works, what we've done in the field, and then how we're really thinking about scaling it. I know Ria touched on that, of some of the constraints that exist in the world today is scale. So at a high level, what we're doing here is taking end-of-life oil reservoirs and converting them into hydrogen-producing assets. So these are depleted and uneconomic oil fields. The way we think about it, the underlying concepts of it is that the residual oil is the feedstock, The reservoir acts as your bioreactor, if you want to call it, and then the infrastructure is already built and exists. So let's talk about the hydrogen applications. There's always a question of what is hydrogen used for in today's markets? Right now, over 70% of hydrogen is used in ammonia and refining. So it's something that exists, right? This hydrogen demand is very real. It's not something that needs to be created. What we're seeing when it comes to incremental demand, we're seeing those into hard to abate industries, sustainable aviation fuels, electrofuels, and more increasingly, power, right? If we look at what's happening in Europe with sustainable aviation fuel, they have a mandate that by, I believe it's 2035, 10% of all sustainable aviation fuel needs to come from hydrogen. How is that going to happen? It goes back to that question of how do we scale hydrogen? One area we're spending a lot of time thinking about at Eclipse is power and data centers, particularly behind the meter, where reliability and location, it matters more than grid, or it matters more than grid dependence, right? So when we look at this internally, we're not asking, is there demand? We're asking, how do we deliver hydrogen at the right cost, scale, and importantly, the right place? So another thing that we're getting asked is, what does a market opportunity look like? What is the demand as far as how can we quantify that? By 2035, there's a potential to reach up to 250 million tons per year. We're not assuming that all of that's accessible, but what that does show is there is a gap, and how do we fill that? The way we break that down, how Eclipse is going to deliver hydrogen, we take that number, we understand what can we realistically go after, what can we target, and we apply filters on reservoir compatibility, policy. So an example is areas that might not be the safest place to work. We don't want to be going into those areas because safety is of utmost importance to us at Eclipse. And that reduces it down to that 21.5 million tons a year. From there, we look at what can we target with early deployment across qualified fields. So oil and gas is prevalent across the globe, and this infrastructure already exists. Where is that infrastructure? Where are those fields that have the right criteria for our biotechnology to work, to convert those uneconomic depleted oil fields into these hydrogen assets? So we're not trying to replace those systems. We're just trying to repurpose it. Next, we'll look at the different technologies that exist for hydrogen production. You've all probably heard of the hydrogen color wheel. So you have your green hydrogen, blue hydrogen, white hydrogen, etc. We're not big fans of that here at Eclipse. And the reason we're not fans of it is because you're trying to qualify something that ultimately needs to be quantified, right? Well, there's three metrics we're really focused on. It's levelized cost of hydrogen. So can it compete on price? There's carbon intensity, of course, which is how the hydrogen color wheel works. And then the water requirement. I think that's an underexplored quantifier that should be top of mind, especially with where the world's moving into today's day. So when we look at electrolysis, we see expensive capex, and that means low mobility, which creates difficulty in scaling, right? We're seeing a lot of projects go offline, especially when subsidies change and government policy changes. Ultimately, they can't compete at the price, and that's why we're seeing a lot of projects going offline. The carbon intensity is fantastic, and I think that's something we all are striving for is green. But ultimately, that constraint of the price is really what makes that difficult. Then you have the water requirements. It is very water intensive, and we're going to see costs continue to rise across manufacturing, your capex, etc. So let's next take a look at geological hydrogen. This is something that's quite interesting, and it's very similar to an exploration play for an oil and gas company, right? You're trying to find a resource. You have your exploration costs, your development costs, and then there's unpredictability there. But where it does really well is on the levelized cost of hydrogen being around that $1.50 mark. Carbon intensity can be quite low, and it doesn't require water. So we see this as a very viable path in the future. You have a lot of capital being invested in this space as well. I think Coloma is a great example of that. And then when we look at SMR plus CCUS, so something like blue hydrogen, for example, again, it can be very cost competitive. So $1.50 carbon intensity, it varies significantly, but you can get as low as 2 to 3 kilograms of carbon dioxide for every kilogram of hydrogen produced. And then you don't have water requirements. Now, this is highly scalable, and we're seeing this in the United States, but we're not seeing it so much globally yet. But we're excited about this technology and think it's something that is going to be part of that hydrogen supply that's going to meet some of the demand. What we're doing here at Eclipse, again, focusing on these three quantifiers, our projected levelized cost of hydrogen is 50 cents per kilogram. Carbon intensity, we're trying to keep it very low at around 0.35. And water requirement, again, we don't have any. So what we have is we have access to extensive reservoir data, right? This is decades of production data from these wells that have already been characterized. And then you have the infrastructure, which reduces your CapEx significantly. I want to kind of touch back on that point of the 50 cents per kilogram. So that converts to around, let's call it $4.40 per kilogram. So when you think about this, if you look at who we're competing against, we're not trying to compete against other forms of hydrogen. What we're really trying to do is we're trying to compete against incumbents. So if you look at the Asian markets right now, you see around $15 to $20, right? What we want to do is we want to provide an alternative solution. And that allows you to have that energy security as well, right? So with all of these technologies, I think that's really what the focus is. We're not competing against each other. We're just competing against incumbents. Now we're going to take a look at how we at Eclipse unlock subsurface hydrogen. So this is introducing biotechnology. I think this is a novel approach to the hydrogen space. You have a couple different biotechnologies, so very different than serpentinization. What we do is we have microbes, or if you want to call them bugs, that feed on residual oil or the hydrocarbon, which frees the hydrogen molecule, which is what we produce. So the way we look at this is an integrated problem. We're looking at geoscience, reservoir engineering, geochemistry, and then deep genomic microbiology. And that's how we create and calibrate the biotech to convert these depleted oil fields into hydrogen producing assets. So again, this isn't about building something entirely new. It's really about reconfiguring what's already there. This isn't just theory either. This is something we've done in the field. And that's what brings me to our first of a kind field trial that we deployed in California last May. So this was something that was groundbreaking. This had never been done before. This is really where we moved from concept to actual field execution. For all of you folks that are on the line that are technical, you'll understand this and appreciate this more. You know, we think everything's going to work out in the lab the way we predict it to be, and then you go into the field and it's something entirely different. luckily for us, that entirely different was even better results than we were anticipating. So the goal for us was simple. We wanted to conduct a field trial in California in the San Joaquin Basin where we injected the microbial biotechnology into a depleted reservoir and validate that we can generate hydrogen in situ under real conditions. So what we saw was concentration of 400,000 parts per million in the produced gas stream, which was much higher than anticipated. For us, that really was a critical validation point. It wasn't just about the number, but it was the fact that the system works in a real environment. We're very deliberate in using existing infrastructure because that's ultimately central to how we think about cost and scalability, right? Um, Going and drilling a new well is not going to get you anything close to what you're looking for. So going into something that was already, you already had a well, injected the biotech, and it worked, that was a meaningful step in proving what we're doing at Eclipse. It's working outside of the lab. That brings me to, how do we scale this? What's the subsurface hydrogen map look like? So how we do it is it's through a structured process. So we start with screening. From there, we understand what are the characteristics of the reservoir, where can we operate, where does the biotechnology work, in what conditions, and how can we push that envelope. From there, we move into sampling and testing, which is where we characterize the system and tailor the approach. So calibrating the biotech for that specific reservoir. If you think about these reservoirs are similar to your microgut biome, right? What we're offering is the prebiotics and the probiotics. So calibrating that technology is what I mean there. From that point, we run pilots to validate the performance. And then where it makes sense to move into commercial deployment with partners, we do. So this is the way we're thinking about scale. We're thinking about repeatability across qualified fields. And we're not assuming this, I guess, concept of universality. I just wanted to show a graphic as well of what does that look like for anyone who's not in the oil and gas industry. How do we use the biotechnology in these existing fields? So what we do is we inject the biotechnology into the reservoir using the existing infrastructure. So that can be an injection system, or we can convert a producer into an injector. From there, the microbes, this activates the microbial process, which interacts with the residual hydrocarbon. Those reactions generate the hydrogen-rich gas stream, which is what we produce through the existing wells in the field. So from there, it's separated and routed to the end use application. So we'll touch on this in the next slide of the clean molecules versus the clean electrons. So the key difference in how we approach this at Eclipse is that we're converting and we're processing the hydrogen in the reservoir rather than doing that somewhere else. And we're extracting that in the field. Now, I know we touched on what hydrogen's used for earlier, but something to understand and how we think about it at Eclipse is that the region that you're operating in is really going to dictate what you do with the hydrogen molecule itself. So I'll use California as an example, or an area like Oman that's, Oman's investing, I think it's $150 billion into their hydrogen infrastructure. In California, you have already offtake opportunities when it comes to hydrogen fueling stations or sustainable aviation fuel. So somewhere like California, you're going to really want to probably focus on the molecules, right? You're extracting that and then purifying where needed in order to sell it at a premium pricing. So pricing is going to also dictate what you do with the hydrogen. In areas like California, you have off-takers that are looking at, we think about $3 a kilogram for hydrogen. In somewhere like California, that can be significantly higher. That can be, we've had conversations with some folks that are paying up to $30 a kilogram for the hydrogen, right? So that's why we talk about the region dictates what's going to happen. In an area that's a little bit more remote and doesn't have the same access, we think about the electron side, specifically data centers. So at Eclipse, we've partnered with a group, OEM of data centers called Armada AI. They have this bulletproof data center that you can put anywhere in the Arctic to the desert. And what we think about is how we can co-locate these data centers in the field by combusting the hydrogen stream to power these data centers. So there's an elegant solution for both sides, whether you're in an area that has a ton of infrastructure or an area that doesn't have it. We have the flexibility of doing what the operator would like to do with the molecule. I kind of want to touch on what are the key challenges and what are the solutions to scaling. Now, this is, I think, one of the themes of the conversation of how do we scale? What does that look like, and how are we going to do it? Really, what's important is that because we're going into these existing fields, we already have strong reservoir characterization. So these fields are de-risked before we even deploy, and then they're backed by decades of production history. I know I've touched on that a couple times, but ultimately that's a solution to some of the problems that already exist. Then our ability to calibrate the biotechnology is something that allows us to iterate for reservoir-specific conditions. Of course, these are dynamic systems, and it's important that we're able to move quickly and adapt, and we have that ability. So this is then validated by the performance in the field itself. Leveraging existing injection and production systems, it allows us to de-risk and reduce any technical or any unnecessary capex, right? From an operator perspective, or we're aligning with all our partners. So that's the oil and gas companies we're working with in the field. We're working with groups like Armada. We have a partnership with Weatherford, who acts as our operational arm and execution arm. And then just today, we have a press release that went out that we're working with Wood Group that also helps us to understand how we get to that downstream opportunities and how we're going to scale this technology. So really, it's leveraging partners that already know the field and what they're doing. What we bring to the table is the hydrogen. We're experts in the field of producing hydrogen. We're not experts in everything else, but by partnering with the right groups, that's going to allow us to bring that full circle ecosystem to these projects. So providing a turnkey solution is really ultimately what we're able to do. So these really are execution challenges. These aren't scientific unknowns. So what are we doing, and why are we doing it? I think the context that we're working within today is that hydrogen demand, it's still growing, right? But ultimately, Ria touched on this earlier, cost is still the biggest constraint. There's a large base of subsurface infrastructure that's underutilized, and energy security is pushing towards localized production. This is something we have conversations about on a weekly basis. We have multiple different groups reaching out to us and talking about this, that energy security is of utmost importance right now. So what we're doing at Eclipse is something that sits at that intersection. We're combining that field validated performance, a fundamentally different cost structure with a low carbon profile, right? And we're doing that by reconfiguring these existing systems. We're not building new ones. So the way we think about that at Eclipse is pretty straightforward. These aren't declining oil field assets. They're just potential hydrogen production systems. And our focus is on is that we're trying to unlock that through disciplined field-based deployments, and we're actively working with partners to do that today. So with that, I'd be happy to take any questions that the audience has.
Thank you so much, Ajeet, for the insightful presentation and a great overview. We'll now open it up for questions. Please feel free to drop the questions in the chat, and we'll try to address as many as we can. We do already have a couple of questions in chat, so I can get started. Um, for your price of 50 cents per kilogram LCOH, what does this represent? A wellhead, into pipeline, or other? Please explain.
Yeah, that's a great question. I think we talked about this a little earlier, Ria, before the presentation started. So that is proprietary right now, but that's something we're seeing that you'll see very soon in our partnership with Wood, who is doing an LCA and an LCOH. So those results should be accessible in the near future. So we'll be able to have that conversation in more detail.
Thank you. And the next question is, are more details on the field trial results available anywhere, somewhere?
Yeah, the results of the field trial, you can read about it on Bloomberg. A lot of the conversations around that, if there's anything particular, I'm more than happy to try to answer that. But the article did a great job of answering a lot of the questions that folks had on what does it look like, what we did in the field trial, how it was done, and then who we partnered with for executing. So we worked with Champion X on that one, and then the results that we were able to publish are there.
Okay, thank you. What other gases are typically co-produced in practice, CO2, methane, and at what approximate levels?
That's a good question. Again, sorry, folks, I know this is a research-heavy and technical group that's asking a lot of great questions. A lot of this information is under NDA. But to answer that, it's gonna vary, right? Anyone who has oil and gas experience can understand that these compositions will change depending on what the composition of the reservoir is and how the biotechnology proliferates and permeates through the reservoir.
Okay, thank you. Another question is, how do they assess environmental risk in aquifers?
Yeah.
Sorry.
Thanks, Rita. That's a good question. So what we did in the California field trial, just to give a little bit more detail, before we even started our sampling, but before we started injecting the biotech downhole, what we did was we characterized the reservoir. That includes what the microbial environment looked like before we started injecting. And then throughout the process, we continued to monitor and take samples to understand how that environment was changing. Ultimately, after we stopped injecting our biotechnology and we continued to sample for several weeks after as well to understand what is happening downhole with the microbial environment. So what was interesting was the results, and I hope I'm allowed to say this, but the results were very interesting, is that the reservoir came back to the same levels that it was prior to us introducing our biotechnology. So when we talk about the risks associated, of course, that's something we're continuing to monitor, but because of the way we deploy and the biotech itself, what it's based on is the fact that we can have control of what's happening within the reservoir based on our biotechnology solution, right?
Thank you. Another question is, particularly for bio-based solutions like yours, how sensitive is performance to subsurface variability and reservoir operating conditions?
Yeah, I think I touched on this a little bit earlier, that this is an integrated problem. It's not just about biology, it's really understanding the engineering, the geology, and then of course the microbiology. But how important it is the biology component. And how does it work within the subsurface? It's very important. Of course, it's something that we work on a lot in our labs, and the way we deal with it is it's our ability to tailor or calibrate the biotech to those specific conditions. Of course, we're focused on optimizing the biotechnology in order to produce the right purity and then the right volumes when we get to that commercial scale. So yes, these are things we focus on, and it does vary how significantly. I'd have to check in with our microbiology team, but more than happy to follow up with you or whoever asked the question at a later time.
Thank you so much. Another question is, how do you simulate subsurface conditions in the lab?
With an incredible team that understands this very well. That's really how we do it. So we have a state-of-the-art lab in Houston, and everything that's needed to simulate these reservoir conditions exists there. So what we do is, of course, in the sampling program, is understand what does that look like. Again, we have access to decades of production history, right? And so having access to that, having a world-class team is really how we're simulating these reservoir conditions and state-of-the-art lab.
Thank you. If we don't have any more questions, we'll wrap it up here. Thank you, Harsh, for putting in the links for the press release with Wood and the field startup press release, if anyone wants to go and have a look there. Yeah, anybody, any other questions? I think that's good. Thank you so much, Ajeet, for taking the time to do the presentation with us. We appreciate all your insights. And thank you, everyone who joined this session. I hope you found the session valuable, and thank you for taking out the time. We have a feedback form in our chat. We would love if you could fill that so that we can get more insights from you and we can make these sessions better for you in the future. And we will follow the session up with the proceedings of this session. And you'll get the recording and the presentation with contact information of TCG and Ajeet. If you want to directly reach out to us with any more questions, we're happy to answer those. Thank you so much. And I hope everyone has a great day.